Welcome to Flip Nerd Live, discussions with and training from America's very best real estate investing professionals. We meet live twice a month to discuss what's working now and get your questions answered. We broadcast live inside of a private online community, which you can join for free by visiting flipnerd.com/live. Let's start today's show. Hey everybody, welcome to our very first Flip Nerd Live show of many. This is a new show. I've been doing podcasts at this point for 8.5 years, over 1,500 video podcasts. And this is the first one that we've done live in quite some time. I've played with live shows before, and we built out a studio, and I'm tending to bring to you, my intention is to bring to you amazing guests like Jason Lewis that we're going to be talking to today, really high volume folks or folks that we have a tremendous amount to learn from. And we're going to do that twice a month. And so make sure that you're inside of our Flip Nerd Facebook group, which is where we broadcast these two. So, Jason, how's everything going, my friend?
Going great. Thanks for asking.
Awesome. And so some of you guys watching this might know that Jason actually is also my business partner. So not only are we recording a podcast today, I think this is our third meeting officially today.
Third meeting together today.
Yeah. But today I'm not going to talk to you as a business partner necessarily, just talk to you as a real estate investor and glean some insights from you. So I'll tell everybody, Jason runs a high volume wholesale shop out of Utah and is a highly respected person in our industry for sure. Jason, maybe you can take just a moment and tell us a little bit about what your business looks like, and we can kind of dive in.
Yeah. So I spent my first 5 years working for somebody else, growing a big flip company. And then September 2017, started out on my own, doing a few deals, and then grew that to where we are now. We're on pace this year to do $4 million in assignment fees. Last year and the last 2 years previously was $3 million. Full built out team, COO, acquisition managers, dispositions, relationship, and lead managers, all of the above. Have an amazing team that largely runs the show here, so I can spend most of my time focused on Investor Machine.
Yeah. Awesome. And for those of you that are watching live, ultimately this is going to be interactive. We want to answer some of your questions. If you're watching a recording of this, you may not be watching it live. So you can go to flipnerd.com/live and register, and we'll notify you of each new upcoming show. And you can actually see our previous recordings as well as upcoming shows as well. So this is show number 1. So Jason, what I really want to talk about today is what does it take to run a multiple 7-figure a year wholesale business? And we'll kind of dive into different sections of the business, kind of starting off with what it takes from a team standpoint. You just mentioned that you have a team that runs a lot of this for you. You can't run a business at your level and still be involved in a lot of the day-to-day stuff, acquisitions and all those things. So tell us a little bit about not just what your team kind of looks like per se, but what it takes to run a multi-million-dollar wholesale business from a team structure standpoint.
Yeah. And I'm glad you started there, because in my opinion, that's probably the most important part. In terms of running a business at this size and scale, it's all about having the right team of right people and things like that. So, and I mean, I will say it's hard. Building a team and finding good candidates and everything else in this market is as hard as finding good deals in this market. Yep. And having the ability to recognize and identify them and then keep them through the Great Resignation and everything else, it is a challenge. So I will say I was pretty intentional about it. When I first started, I felt like there were 3 skills I needed to master in order to become successful. The first was setting goals. The second was habits. And the third was being able to hire and retain people. My favorite book on goals is Darren Hardy's Living Your Best Year Ever. My favorite book on habits is Atomic Habits. And my favorite book on hiring is Who, the A Method of Hiring. But so the biggest, most important part with hiring, there's 2 out the gates. Number 1 is you need clarity on who and what you're looking for. Like Alice in Wonderland with the Cheshire Cat. If they say, "Where are you looking to go?" She says, "I don't know." They say you can take either path. Same thing very much so applies with hiring. And actually, I was just talking to a friend of mine, Tahani, about this. I tried really hard to hire and have continued to try really hard to hire for the growth that I'm anticipating having. So, for example, my first ever acquisition manager was my first ever lead manager.
And now, a word from our sponsors. Investor Fuel is America's #1 mastermind community for professional real estate investors, where hundreds of the top investors from across the country come together to build stronger businesses and stronger lives. Our community is about giving and transformation. If you're ready to take your business to a whole new level, please learn more and schedule a call with us today at investorfuel.com. Investor Machine is the nation's #1 done-for-you lead source for professional real estate investors, serving many of the highest performing and most respected real estate investors in America. We use a unique approach to data that is truly unlike anything else on the market, then execute your direct mail and skip tracing campaigns for you. Markets are filling up quickly. If you'd like to learn more about our world-class service, please visit investormachine.com. Find out why over 7,000 real estate investors and agents have chosen Carrot to build their website to attract and convert more online motivated seller leads. Visit flipnerd.com/carrot to learn more about how Carrot can help you.
So I hired him to be a lead manager, and then he grew within the organization to be able to be the acquisition manager, and did a great job and everything else. It's much easier when you're, the challenge that we have as real estate investors is most people think we're a scam, right? Whether that be sellers or whether that be potential employees. Tonight, I'm going to dinner with an acquisition manager's candidate and his wife, because his wife is like, we're hiring for another acquisition manager, and we're making progress in the interview. And this is a high level person, right? Like they work for he's the top sales guy at a venture capital backed sales company that does education stuff down in Provo. And, they've got benefits, they've got regular schedule and everything else, and so the idea of coming and working for a wholesaler, it's like, you mean the guys that post the We Buy Houses signs on the side of the street, those guys, like, that's a scam. So even at the stage where I'm at now of a big organization and everything else, it's really hard to initially overcome those obstacles. And so one of the best ways to do it is to get people at more the starting phase of their career. So in my early stages, I got people much more at the starting phase of their career, and then had them grow within the organization. And I feel like we did the same thing with Investor Machine too. Like the person over our account management, the person over our production, they were our base level people initially, but they were the type of people, local, US based, super smart, with the ability to grow. I mean, the guy that we had preparing our first mail orders for Investor Machine, like it literally, like making sure the lists are done right, putting the mail orders together, etc., has an MBA. You wouldn't think that the person putting together the mail order would need an MBA, but we were hiring for where we were looking to go in the growth and things like that. So hire for growth, that's one. Hire early emerging talent, especially when you're small. Don't necessarily be looking for the proven talent. They may be hard to afford and they may not be completely interested in you. You know as much as anybody, I love virtual assistants. We have a huge virtual assistant base with us at Investor Machine. But for any type of sales role and voice, if you can, I really like hiring local so they can continue to grow in the organization.
Sure. Talk a little bit about that hiring for scale, hiring for where you're going, and hiring more talented people. Like I think as real estate investors, a lot of times it's kind of ingrained in us to be cheap. Like I'm looking for, cheap leads. I want cheap houses. I'm trying to find cheap contractors, and I want everything to be reliable too, right? It doesn't really work that way. So talk about the fact that a lot of real estate investors will go find somebody that appears to be cheap, but it ends up costing them a lot more in the long run. And I guess in the context of being willing to invest in your business and pay a little bit more for somebody that can help you hit those goals in the first place.
Yeah. So great question. So I will say a lot of it really depends on what season of business that you're in, right? In our both companies, early Investor Machine, Mike and I grew the Utah company first, and then Mike and I grew Investor Machine together. And there's definitely similar strategies in both. Early on, it's bootstrapping it. And you're definitely getting more, you're definitely being more budget conscious early on, because you don't want to completely run yourself out of capital small unless you're, again, a venture capital backed company that raises $100 million pre-revenue, right? Most of us aren't that. But that said, a general principle, the last place you want to cut corners is on the quality of your team. And an A player, somebody that's really good, will always pay for themselves. But sometimes when you're young and when you're small, as a company, it's kind of hard to attract some of those expensive A player, like transition those type of people. Like, a lot of our most recent hires, right? Like the guy that's over sales with us, the guy that's over technology with us in Investor Machine, as well as my recent acquisition manager hires. 3 years ago, none of those people would have talked to me.
Right.
Even if I would have found them, and even if I would have offered to pay them what I'm paying them now, I hadn't proven myself, and I didn't have enough of a type of system structure, business, etc., to have them be willing to leave the jobs that they were working at. I mean, they worked at McKesson, 6th largest company in the nation, and like big companies, things like that. Get people to leave companies like that. You kind of have to earn that right. So when you're small, it's hiring your more younger emerging talent with potential. And the advantage to that too is if you get it wrong, you can let them go quicker without quite the same amount of damage overall to your company. But you still don't want to be cheap. And you want to be hiring, hoping that they'll be able to grow into the leader that you want them to be long term.
Yep. So a couple things that you said I want to recap on, kind of related to team before we move on, is up front, you said you wanted to get really good. You knew if you got good at setting goals, at creating habits, and hiring and retaining people, that would take care of a lot of the business, right? So usually people would say setting a goal, that sounds like that's easy. That's just something I do on a napkin at lunch, right? So, but maybe just kind of clarify there, like why is that important? Because a lot of us set goals, and it doesn't have the context for how to get there necessarily, but talk about the importance of setting a real goal.
Yeah. So, I mean, goal setting for me is a much more thorough process than it is for most people. And again, following the workbook, Living Your Best Year Ever, I go through a whole process of figuring out, what am I grateful for? What have I done in the past? What were my greatest wins? And then a whole visioneering process of where am I looking to go, that boils it down into just a few most important goals. But the most important part in all of this is then every Sunday night, I go over my weekly rhythm register to see where am I at compared to my goal. And make sure that I'm on track weekly, monthly, quarterly, etc. This idea, sure, anybody thinks they're good at setting goals. They sit down at New Year's, throw out a couple of pipe dreams, write them down, throw them in a drawer, and look at them again next year. That's not setting goals. Setting goals is, and you could even set SMART goals back then too. That's great. But do you have a process of continually sticking to them, measuring, reevaluating, as well as setting goals for your overall team, having KPIs for your team that you're tracking? And Gary Keller calls it setting goals to the now, right? You want to do $1 million in wholesale revenue. That's awesome. What does that mean you need to do today? What does that mean you need to do this week? That means I need this much revenue this week. That means I need to make this many calls this day. I know that if I want to do $1 million, I need to spend this amount in marketing. I need to just do this, and this. And getting it all the way down to the indicators of today. Because when you look at $1 million, it's like, oh, that's a big mountain to climb. Like, it's like you're standing at the bottom of a great pyramid thinking that's really far. But when you set goals all the way down to the now, that's not so bad now. It's just one step. What does this one step look like? This one step. This one step. I mean, it's essentially what we just did with Investor Machine with the goals in our monthly town hall earlier today. We need to add, we need to increase our net active members this much and average spend for everybody this much. Much more attainable and feels like a step that all of us can go and attack and do.
Yep. So one last question on people. So talk about the importance of, I know that some of the people that we've attracted and some that you've attracted, they have an interest in real estate investing. So they're in maybe high level corporate jobs or jobs that sometimes, seem like, can we even afford that person? But they sometimes have an underlying interest in doing what we do. Right now, sometimes, at the same time, I think a lot of real estate investors are afraid to hire people that are like, am I just creating competitors? So maybe talk about that balance of, using the leverage you might have to hire talent that wouldn't go to somebody that's your size company. I mean, $4 million is a very respectable wholesale company, but compared to McKesson, it's like nothing, right? So
Right.
that feels very safe and a proven path versus kind of unproven and certainly much smaller, relatively speaking. But sometimes there's an interest in like, I really want to do what it is they're doing. How do you balance between using that as leverage to attract somebody, but not creating competitors, if you will?
That's a great question.
We're having the fear of that.
Yeah.
By the way, I
funny
didn't know, Jason, any of the questions, guys. So this is how I roll. I just making it up.
So
as I
it's
go along.
interesting. Tahani, who I was talking to just before this, and I were having a very similar conversation. She was talking about creating competitors and this as well. So I have never worried about creating competitors. And I also coincidentally have never created a competitor. In the 5 years I am a competitor now to my last boss. So I mean, I do know that it can happen. I was that guy, but in 5 years I've yet to do it. So I guess I'll share first some things that I do that has me not create competitors. One, in the hiring process, I look for the highest amount of talent, period. And I don't necessarily fear creating competitors because I feel like my goal is to create an opportunity bigger within my organization for them than without. So it's constantly casting the vision, making sure they're being paid appropriately. And really, ideally, I like to give them as many of the advantages of entrepreneurship, especially these, and we're talking the A players here, right? So this may not necessarily, I would say this overall applies company-wide, but especially to like, your acquisition managers, your people making six figures, things like that. Like I give them high level freedom of schedule. I make sure that their potential and their earning capacity isn't capped. And I'm constantly investing in them and their growth and everything else. So they're getting to have the benefits of entrepreneurship without, the incredible roller coaster that comes from entrepreneurship, right? Like over the last few months, I've had a month where I net six figures and I've had a month where I lost a net 80 grand, right? That's not fun to ride that roller coaster. And I make sure that in my conversations, I'm talking about not just all of the benefits and glory of being the entrepreneur, but also talking about the negatives and the not fun parts of being an entrepreneur as well. We have
until you're an entrepreneur, you might not know it, but there's a ton of, right?
That's right. We have a structure where we can all invest together in rentals. Basically, for a certain amount of money that they make, they get ownership in rentals, which again gives them the benefit of long-term appreciation in rentals and everything else, without the negative of getting the phone call on Christmas Eve to go fix the toilet and dealing with property management and everything else.
Yep. Awesome. So let's dig into.
I don't know that I answered that one all the way. So. Yeah. Go for the best talent. Don't worry that, everyone does sign paperwork, non-compete paperwork as well. But I actually tell them, hey, I gave my last boss 5 years. On year 5, I will tear up the non-compete. And at that point, if I haven't created a good enough opportunity for you to not become my competitor, you gave me 5 years and I'm thankful for all you did. And I hope we can work together after that.
Yeah. One thing that early on, I was always afraid with acquisitions people. Like I think they just have this inherent fear because a lot of us started small and worked super hard that somebody's going to like take that away. Right. I mean, I think that's kind of what drives us as entrepreneurs early on is this, just a little bit of fear isn't a bad thing necessarily, but it might be unwarranted because like you said, most people can't go do everything that it is that we do. But I started to shift it towards saying, look, if you do this with me for a couple of years and you want to go out on your own, then we could partner together. I'll help fund your deals. Like you could sell to me, things like that. Even if it never happens, I think for a lot of people, at least it shows them a path that like, hey, I could start here and there is a path for me further down the line if that's what they really want to do. Would the majority of people do it? No, but maybe it helps with recruiting people that there is some longer term path for me if I wanted to go out on my own.
Absolutely. Yeah. And I like that to say, hey, there is a path long-term along the way. And I will say like over time, the more I've grown, the more abundant I've become.
Yeah.
There's plenty to go around. And here's the thing, if anybody wants to become a real estate investor, there's courses, there's podcasts, that like everything you need to go do this, you can find online with or without me.
Yep.
And then I guess the other part that probably helps is, other than my COO, I would say I don't give anybody, like the acquisition manager is great at acquisitions, but they're going to have no idea how to drum up a lead, right? The marketing manager is good with me in drumming up leads, but they would never be able to actually go and close a seller, right? The disposition manager knows how to disposition properties well, but would have a heck of a time generating leads and closing sellers. So like nobody has the whole picture either, which I would say also probably contributes.
Yep. So next, let's go into kind of lead gen. So to run a shop like you do, you have to generate a lot of leads. It never, and obviously you and I are partners in a lead gen business, Investor Machine, but it never fails to surprise me that there are so many real estate guys that are, let's just say they're doing 2 deals a month and they're like, I'm going to double my business over the next year. And you find out, well, they didn't raise their advertising budget at all. It's like, okay, well, how's that going to work out for you, right? So you have to be willing not only to invest in people, you have to be willing to invest in generating leads. That could be systems, it could be direct mail, it could be processes, it could be relationship managers. For you, I know it means all of the above, right? So talk about like what it takes to operate at a high level from a lead gen perspective. Let's dive into that.
Yeah, a lot of money, especially in this market. As the market has gotten tighter and tighter, cost per contracts continue to go up, but revenue per deal also continues to go up. So my ROI is as high as it's been, but my marketing spend is by far the highest it's ever been, in order to get, the same amount of deals, but those same amount of deals are also worth significantly more in revenue.
Right.
And so I'm a big believer in a diversity of strong marketing channels. So I'm an Investor Machine client. I do direct mail and skip trace lists through Investor Machine for the texting and the cold calling. I do PPC, Facebook, SEO. I do networking and relationships. Each of those are good, solid legs of my company, which, matters a lot in terms of having an overall stable company, because all of those marketing channels are going up and down and up and down in terms of their effectiveness. I'm a big believer in done for you and letting the experts do it. I don't do my own mail and lists, even though I'm really good at it. I let Investor Machine do it because they're even better at it than I am. Like, as good as I could be at pulling my own lists and running my own direct mail, because of the softwares and everything else that we've developed at Investor Machine, I couldn't do it at the level that Investor Machine does on my own. I don't do my own pay-per-click. I don't do my own Facebook. I don't do my own SEO. I find the best companies out there that aren't taken by someone else in my market. And I work with those specific companies. The one thing that I do in-house, though, is I do manage my own texters and cold callers. I have yet to be able to find that outsourced cold calling texting company that does really, really well. If someone has one that they absolutely love, I would love to hear about it. So multiple strong marketing channels. And again, right now, direct mail, crushing it. And my online is crushing it. My texting cold calling is just okay. My relationships is poor. 2 years ago, my relationships were amazing. Last year, my texting was amazing. So, every quarter, they're all doing this, up, down, up, down. Part of it is what I focus on, because what you focus on and put energy into grows. But part of it is just market timing as well. When the market's as hot as it is, my relationship deals don't work as well as they do in a little bit not as hot a market. But if you only have one trick, you're going to be sad.
Yeah, because someday it's not going to work, right? I mean, that's what some people don't realize. I think you even said this, and we'll just, as owners of Investor Machine, put ourselves out there that your Q4 sucked, but your Q4 one was amazing. But you have to ride that storm, right? I mean, I think with every channel, there's ups and downs. There's noise, whether it's elections or holidays or things like that. And it's amazing to me that in this business, having played the game a long time, it could go from like, this isn't working, to your most profitable deal ever, and you like fall in love with it, and it just takes it's kind of like the lottery. I hate the lottery, but you can't win if you don't play, right? So you got to be playing the game and stick with it consistently to be able to prove that channel works or it doesn't.
Yep, absolutely. And I've had some channels that I've tried that haven't worked. I have a ton of friends that crush it in TV. Utah and TV weren't meant to be. I've had most of my competitors have tried TV, and TV in Utah just don't get along well. I respect the heck out of the TV service providers that I've worked with. And again, a lot of people do well, but just didn't go well for me. I tried a cold calling company. It's not like everything you touch in this space turns to gold, but you got to consistently be trying and scaling up those channels and having the patience to let them see it out, and make sure you're picking to partner with the right provider that has an established track record of working with a lot of other people's success.
Yep. Yeah. Somebody said that to me a couple weeks ago. They said, everything you touch turns to gold. And in my mind, I was like, no, it doesn't. Like nobody sees the mistakes and the errors and the tests that didn't work and all that. Right. I think for entrepreneurs that are listening to this right now, like, don't expect, even talking to somebody like, Jason here, he's failed a lot, right? I mean, that's part of the process. That's part of how you learn how to move forward. So for a lot of folks, their expectations are just wrong. They get into business, or you're doing a couple deals and you're like, I tried direct mail for like 6 weeks and that didn't work. Or I tried this thing. And it's like, you have to be constantly testing things and trying things, and you can't give up quickly, because we have long sales cycles in this business, right? There's people that you could be marketing to for 10 years and eventually they pick up the phone. They've been getting your letters or you're seeing your ads or whatever it is forever and ever and ever. And they just weren't right. And then something happened. It could be a health issue. It could be a tax bill. It could be something that they're like, I've been seeing this ad for a while. Today's the day, right? But you have to play the long game in order to see those things, right?
Absolutely. Yep. My favorite definition out there of a successful person is a persistent failure. That comes from a guy named Mitch Hume. He paid his little sister to read every success book known to man. And they read them all, and what they came back with, and she read them all, and they said, how would you define a successful person? And she came back with a persistent failure. And I agree with that. I've got lots of little failures. Again, that cold calling company that I mentioned earlier, $35,000 loss, no deals. But it's okay. I call it the R&D fund. Like, that one didn't come together. Even though I was in-house calling and texting from that exact same list, and it was producing great. I followed my formula. I had other people that I knew that had success with it. I researched into it. It overall made sense, and the money was spent. Obviously, I would have rather had a Tesla Model 3 with that $35,000, but it's okay. That's the cost. It's the cost of business. It was one failure, and there's constant little failures. But to be successful, you got to be able to roll through those little failures quickly, not get discouraged, and continue. And there's a lot of risks that I've taken that I got it right on, which is why the business is successful.
Yep. But you have to be willing to fail along the way, for sure.
Right. And we've had the advantage this last few years of what I call the wind at our back, right?
Yeah, for sure.
The market's been moving up. It's been overall, the tide's been high. It'll be interesting to see over the next few years, as we don't have quite that same amount of tailwind, to see, how everybody does with it.
Yeah. The lessons I think to be learned are, people that are paying top of market, seemingly overpaying for deals because they're estimating an ARV that's higher than what the comps show, because, well, the market's been going up. Like, people that are basically expecting the stars to continue to be aligned in every aspect, values still going up, interest rates being low, all those things are the ones that are going to get hurt first. So this is kind of a market where you turn a little bit to conservatism, right? You have to be careful, because you don't want to miss out on deals either. But if you're the guy that's trying to set the new high bar for comps in your market with like high-end rehabs and all that, like, you're the first one that's going to get hurt. So be safe out there, right?
Yeah, I will definitively say, if you are buying based on appreciation, and you've done that historically and it's gone well for you, right now, today is the time to stop that. Look at what's happening in the stock market. Look at what's happening in the crypto market. Even like, in the real estate market, Utah has been fiery hot. I just listed a flip, perfect neighborhood and everything else. And 2 months ago, if I would have listed that flip, I would have had 40 showings and 15 offers. This last weekend, I had 6 showings and 2 offers. They were great. They were still above asking price. I'm still doing great on it, right? But look at the trend with that, and be safe out there. My rule of thumb is I will only ever buy a flip if I am content to hold it as a rental for at least 10 years, which you're going to have to look at because interest rates are higher now. And it's harder to have properties cash flow. And buyers are feeling that too. We're definitely in a time of transitioning market. I'm not a doomsdayist. I don't think we're headed for 2008 or anything like that. But I'm saying if you're banking on rapid appreciation, now's probably not I would suggest changing your point of view right now.
Yep. So Jason, you're primarily a wholesaler. I know you do some rehabs. I know you have some rentals, some Airbnbs and things like that. But are you changing anything from an exit strategy mix or an approach with the market, just anticipating what you just said at all? Or
I'm not, because I've always been super conservative. My goal is when I'm sitting in my rocking chair when I'm old, I want to look back and say, you know what? I played it just a little too conservative. You have 4 choices. 1, I was way too conservative. I kept my money in bonds my entire life in gold. 2, I was a little too conservative. 3, I was a little too aggressive. And 4, I was way too aggressive, right? I dumped it all into angel investing in crypto, or stock options that were highly leveraged, shorting Tesla, whatever, right? So my goal, notice an option I did not give on there is I successfully did it exactly right? I was exactly the right amount of aggressive versus conservative. I timed the highs and lows. If that's your dream, give it up. That's the fastest way to fail, is to shoot for that. So my rule of thumb is I want to be a little bit too conservative. So I've lost a lot of money in the last 3 years over not doing big, cool, crazy, awesome flips. Clay Rockwood, one of my good friends, one of my competitors, he did a flip in Park City. I think he made like multiple 6 figures on the one flip. It was awesome. I was super happy for him. Don't want that money. That's dirty money for me. Is like $1 million flips, not me. Never, not interested. Someone else can have that money. I only flip at the bottom of the market. So no major changes. I'll still keep my 2 construction crews busy. And still keep the one change I will say though is I've been keeping everything as rentals for the last couple of years, and I'm switching back to flipping because with the interest rate increase, it just has the rentals looking so bad right now. Like by the time you hit the debt coverage restraints, it winds up being like 50% loan to value. So that I would say that's the only change, but I'm still buying the bottom of the market and I'm still flipping. But anything that I flip, if I had to keep as a rental, I'd be totally fine with. And I still do more wholesaling than flipping because I grew, I started in this industry 10 years ago, 2012, which was the bottom. So I still kind of have seen what that looks like. And I've seen the devastation to people and everything else. And I'm probably a little more conservative than most. So I've kind of always had a strategy around if it goes that way, I want to be okay.
Right. I think it's just easier to streamline too, a wholesaling business. So I was, as you know, I was heavy on the rehab side. We were primarily a rehabber, which we made more money doing and all those things. But it definitely was harder for me to outsource a lot of the tasks. Like I still looked at every house because I was borrowing money that was in my name. And so I wanted to make sure it was going to happen. That it was a safe bet, if you will. I would still go out to meet my contractor more because we're friends, and it was almost just like a sign of respect that I spent a little bit of time with the property there and at the end. But it uses a lot of your time, right? It's hard to outsource those things ultimately because it's just going to take your time. So awesome. So hey, give some advice if somebody's watching right now and they're listening to this and they're stuck doing a couple deals a month. We talked about setting up the right team. We talked about lead gen. We talked about a little bit about mindset in there and kind of setting the right goals and all those things. If they're stuck at a couple deals a month and they want to scale up and get there, what's some advice you could give? I know that's a broad question, but what's some advice you could give on how to go from two or three deals a month to 5, 6, 7 deals a month?
I mean, it's got to lead with more lead generation. Sometimes it can get down to simple math. What's your cost per contract? Can you double that marketing channel, right? Like if your cost per contract is $5,000 in texting, let's say, can you double the amount of text that you're sending? That's a lot harder today than it used to be because of, supplier constraints, hiring additional people, things like that. It's one of the reasons why I love online and direct mail is because those knobs are so easy to turn. My investor machine, I just increased my budget $7,000. I just sent my account manager an email and said, hey, I want to go up $7,000. That was it. That's all I did. And then, the lead flowing up from there. Same thing with pay-per-click. You can just turn the knob. So, figure out what's your cost per buy. Make sure it's in line with what other people in your market or similar markets are. And if you increase that, if you double the marketing activities, you should double the total number of deals. If you don't, you better go back and figure something out. But if you do, then you do it again, then you do it again. If you're a largely marketing-based business, it can be that simple.
Yeah.
And
the people behind it, right?
Other little things you can do. You can get more deals out of your pipeline. You can be better at lead follow-up. You can be better at conversion. You can be better at the appointments. You can be better at your dispositions, which would allow you to then pay more to buy deals. There's 100 different things that you can do. If you don't want to, the easiest thing to do is to increase your marketing budget. The harder things to do is to get so operationally efficient that you get more out of the marketing budget, which you already have, which basically everybody I know, myself absolutely included, can do.
Yeah. It kind of goes hand in hand with what we talk about with the team, right? At the end of the day, and if you're doing 2 deals a month, let's be honest, you have a job and not a business, right? Because you can't afford the overhead of additional staff to do all those things for you. You're not going to hire an incredible salesperson that's going to get paid on 2 deals a month. They're just not going to make the type of money that they could make doing something else. So those things are critical to make sure that that's really kind of the case for scale here, is how to get yourself into the business owner's box instead of the self-employed or you're doing everything yourself box, is to scale up. And it has to be done through ultimately lead generation, maybe better dispo, like you said, and having a team in place that can handle that, right?
For sure. Yeah. You have to have enough revenue to be able to afford the quality and quantity of staff to run the business on your own.
Right.
That said, it can be smaller than you think. My business largely I started in September of 2017. And by May of 2018, the business was largely running itself off of 1 acquisition manager, 1 lead manager, 1 disposition manager / project manager, and then an office person. So you can get there pretty small, pretty quick. But, imagine this is a basketball team. Who was first off, I was still somewhat involved in all of that. I didn't have to work a ton, but I was still somewhat involved in all of that. And in a basketball game, who do you think was the guy sitting on the bench for every one of those positions? And it all had the same name. His name was Jason, right? If the acquisition manager left, I was the acquisition manager. If the disposition manager went on vacation, I was the disposition manager. So it's nice when you get a company big enough that you can have a couple of people in each of those roles. That way, like right now, we have 1 acquisition manager. We just lost one of our acquisition managers. We're working on a second one. Ask me how many appointments I've been to in the time since we lost our acquisition manager. None. 0. I haven't been to an appointment in years. And even losing an acquisition manager, I didn't go to an appointment because we had an acquisition manager who was able to increase. Last week this is a lot of appointments for you. He did 15 appointments last week, our 1 acquisition manager. And my COO was an acquisition manager previously. So if any overflow was needed, I think he did at least 1 appointment that was needed last week. And if more was needed, he would be able to step up and cover for those specific appointments until we get the new acquisition manager hired, which has me, one of my rules of thumb is you don't ever want to be the motivated one, right? Like as a wholesaler, I make a business out of finding a motivated seller, getting the property under contract, and then finding a motivated buyer and selling it to them. Our entire business model is based around not being the motivated one. So the same thing applies with hiring. You do not want to be the motivated hirer, or you're likely going to make an equally smart financial choice to selling to a wholesaler. Not that selling to wholesalers isn't great for a lot of people, right? We provide value, but it's in exchange for convenience. Same thing. I don't want to be a motivated cell phone owner with a battery dying in the airport. If I've got 3% battery and I have no cell phone charger, I'm paying $60 for that phone charger that I know costs them 50 cents to make. But I do it because I'm motivated.
Right. Yep. So Jason, any other things that are kind of working now or advice you could give to folks that are looking to scale up? This show is intended to be about scaling up, learning from your lessons of building a high volume business. Anything that we haven't really covered yet that you can share?
On dispositions, you don't want to just have a hammer. Otherwise, everything's going to look like a nail. If all you are is a flipper in these zip codes, you're going to miss out on a lot of opportunities. So, have the ability to disposition as many opportunities as possible. Have agents you can refer stuff to. Have wholesalers that you work with, and they can bring you deals. And as well as being able to squeeze as much juice as humanly possible out of every single lead. You should never, never, never pocket wholesale unless it's to me. Don't, like, if you're wholesaling and selling a deal, you should always be talking to multiple people and getting the best bid and deal. And I would say I would probably want to reemphasize too the importance of your systems, your processes, and your lead management and follow up and everything else. And I will say too, if you're not good, I'm fortunate in that I can come up with ideas well and I can implement ideas well. Most of the time, people sit in one camp or the other. So if you're in one camp or the other, you need to find the yin to your yang. Like if you're amazing at ideas and have a heck of a time implementing them and seeing them through, go find someone that can help you implement. That will definitely, that's one of the most important things you can do to move the process along and forward.
Yeah. Awesome. Hey, Jason, thanks for sharing your insights with us today.
And thanks to whoever the Facebook user is. That was really nice.
Yeah, we got some people to say Facebook user. Don't know who they are exactly. Somebody said Jason's a business genius. Listen to what this man has to say. So good stuff. Everybody that's watching the show today, this is our first show. I've been doing the Flip Nerd Real Estate Investing Secrets show for 8.5 years. We've done over 1,500 podcasts on the Flip Nerd Network and kind of rolling back out with a live version of the show. The intention is to bring you high performers, people that are doing high volume, that have learned a lot of lessons, that have a lot of arrow wounds in their back, right? A lot of war wounds along the way. That can share those lessons with you. So we're going to be doing this twice a month going forward. If you haven't registered, to make sure you get notified. We only stream this inside of our Flip Nerd group. And you can register at flipnerd.com/live to see our live show. In fact, we have our first 6 guests scheduled, so you can see who they are out there as well. Our next one, I believe, is Eric Latshaw, who runs a high volume shop out of the Pennsylvania market. Also happens to be an Investor Machine member as well. And so we're going to keep high volume guys coming at you, people that have a lot of talent that you can really learn from. So if you have any ideas for guests that should be on the show, you can let me know. I have a lot of these folks that are in my Investor Fuel Mastermind already, and a lot of friends in the network from having been in the business for a long time. But we'd love it if you'd recommend guests and refer people to flipnerd.com/live so they can join us on the shows too. So appreciate you guys a ton. We'll see you on the next episode. Thanks, Jason.
Thanks, everyone.
Thanks for joining me on today's Flip Nerd Live. To get access to our upcoming interviews with experts and get your questions answered and join our free online community, please visit flipnerd.com/live. Thanks again to our sponsors. Investor Fuel is America's #1 mastermind community for professional real estate investors, where hundreds of the top investors from across the country come together to build stronger businesses and stronger lives. Our community is about giving and transformation. If you're ready to take your business to a whole new level, please learn more and schedule a call with us today at investorfuel.com. Investor Machine is the nation's #1 done-for-you lead source for professional real estate investors, serving many of the highest performing and most respected real estate investors in America. We use a unique approach to data that is truly unlike anything else on the market, then execute your direct mail and skip tracing campaigns for you. Markets are filling up quickly. If you'd like to learn more about our world-class service, please visit investormachine.com. Find out why over 7,000 real estate investors and agents have chosen Carrot to build their website to attract and convert more online motivated seller leads. Visit flipnerd.com/carrot to learn more about how Carrot can help you. We look forward to seeing you on the next Flip Nerd Live Real Estate Investor Training. Please make sure to join our free community so you can join us live at flipnerd.com/live.